This 3R trade didn't happen because I predicted the market. It happened because two concepts lined up perfectly: a weak low and an order block sitting in discount. In this video, I'll show you exactly how that confluence created a high probability entry and why this is the kind of setup I'm actively backtesting right now. My name is Vi. I'm not a consistently profitable trader yet, but I'm building the discipline and systems to get there, one trade at a time. This is for educational purposes only and not financial advice. Let's jump into the chart. So we've dropped down to the 15-minute and zoomed out a little bit to get a better picture of price action. We can see that we have a swing high and a swing low right down here, and that we're currently bullish in the 15-minute order flow. We've also rewound the clock to just before 8 a.m. Eastern. As New York opens, I can look left and identify Asia session low right here, and I'm going to consider this a key liquidity point. Now here's an important detail we need to keep in mind when looking at this Asia low. We can see that price created the low, but it never took Asia high. It just started ranging without taking that Asia high. That failure makes this a weak low. Even more interesting is that this weak low sits above a clean order block within the discount area of the price leg. We can tell by running a Fibonacci retracement tool along the high and the low of the 15-minute price leg and observing where this order block sits relative to the 50% marker. We can confidently identify this as an order block because of the aggressive move up that eventually breaks structure to the top side. If we zoom out to the 1 hour time frame, we can see the order block a little bit more clearly as this collection of orders before the aggressive move up. And all of this results in confluence. Liquidity resting above an observed order block, and that same order block resting in discount. A few minutes later, price mitigates the key point of interest we were observing. At this point, I drop down to the 1 minute because I'm not blindly buying at this area. I want proof that price will reverse. Here on the 1 minute, price puts in a high and then creates a low by breaking structure to the downside. What I need to see at this point is demand overrun supply. If buyers can break and close above this blue line, it tells me that they're now in control and that I can seek higher prices. A few minutes later, buyers step up aggressively and close above the identified supply zone. That's my confirmation to go long. On the 3-minute chart, we can see that this bullish displacement leaves an inverted fair value gap marked up here by the yellow box. That becomes my entry zone. I place my entry at the inverted fair value gap and my stops right below the lows. Now it's about execution. I'll take my first partial profits right at this internal collection of orders because price might react there with any resting sell orders. My final take profit is close to the current New York day high, which is another liquidity pocket. This would result in a full 3.7R trade. Remember, targets aren't predictions, they're probability zones. Price tags us in. While we spend a little time in drawdown, it's nothing too dramatic, and that's when the momentum builds and we head towards our first take profit, which we can see here with the wick. At this point, we would take our partial profits and move our stops to break even. As we let the trade play out, we can see that price reacts near the final liquidity pocket we had identified, which frankly validates the analysis. And now we have to trust our trade thesis to ensure that buyers regain control and our take profit is hit. Remember, risk is off the table at this point, so we have nothing to lose. And we've already paid ourselves in partial profits. Eventually, price pushes into our final take profit for a 3.7R trade. The lesson here isn't that every weak low wins. The lesson is this: when liquidity, structure, and discount pricing align, you don't need to force trades. You just execute your model, and that's exactly what I'm working to do in my live trades. Two simple concepts. One clean confluence results in one repeatable outcome. If you're serious about building a repeatable system and not chasing random setups, I break down every trade I take like this, whether it's in backtesting or in the live market. Click into this next backtesting video right here, where I show another liquidity-based model setup, and I'll see you in the next video.